Welcome to the business interview. I'm Markus Karlsson. The global economy is in trouble, and the biggest threat, unsurprisingly perhaps, comes from the eurozone and its debt crisis. So says the International Monetary Fund. It published a global economic health check last Monday. It said even emerging economies are being weighed down by the eurozone's troubles. Let's get more with the International Monetary Fund's chief economist, Olivier Blanchard. He's with us from the fund's headquarters in Washington, D.C. Welcome to the program.
Thanks for having me.
Now, let's start with a bigger picture. The IMF has trimmed its global growth forecast for this year and the next. How big is the risk in your mind that you're going to have to cut that forecast once again because of troubles from the eurozone?
Well, it's interesting. When we create a forecast, we have to make assumptions. So there are basically three important assumptions. The first one is that the emerging markets, the major emerging market countries, are going to basically soft land, are going to take the policy measures to maintain fairly high growth. That, I think, will probably happen. The second is that the US will not go above, will not jump from the fiscal cliff. Which, to translate in more understandable language, means that Congress will do whatever is needed to avoid a very major fiscal consolidation. If they didn't do it, it could really kill growth in the US, and then that would kill growth in the world. And then the main one is that we're assuming that Europe will slowly take care of the euro crisis, so that in particular the spreads, the yields, the interest rates that Spain and Italy have to pay will slowly decrease, only slowly. Now, these are the three assumptions. Under that, we get the forecast you gave at the beginning. But if any of these things doesn't quite work, then it could be much worse.
Now, you within the IMF say that the European Central Bank needs to take on a greater role in the crisis and buy the debt of eurozone countries under pressure, like that of Spain and Italy. What happens if the ECB doesn't do that?
Well, the ECB should be ready to do it, but under some conditions, which is that if periphery countries, Spain, Italy, need help, then there has to be a European plan. It's not the ECB's job to save single-handedly Spain or Italy. If there is a plan which is basically going to make sure that these countries can borrow at some reasonable rate over the next few years, right? Then if it takes time to put the plan in place, it makes a lot of sense for the ECB to come in and basically provide the funds at some reasonable rate for some time until the architecture is put in place. So I think in that context, that's what the ECB should be doing. And my sense, it's difficult to say, but my sense is that the ECB sees things the same way. They are there to help, but they can't solve the problem all by themselves.
But Spain, in particular, is under pressure from the markets because of high borrowing costs. Right. How long can Spain continue to finance itself in the market without assistance from the rest of the eurozone or from the European Central Bank?
Not forever. So something needs to be done. So two things need to be done. Spain has to continue to take the fiscal measures that they are taking, the structural reforms they are putting in place and all this. They have to do this, and they are doing it, right? But then they need help. They have to be able to borrow at some reasonable rate. And so there are all kinds of schemes which are being discussed, whether it's this thing called the ESM or the SMP through the ECB and so on. But there has to be a way of making sure that as long as they go through with what they have committed to do, they can borrow at some reasonable rate. And 7% is at the outer limit, and anything higher would be tough.
But you say that Spain won't be able to borrow, not forever, you say. What does that mean, though? Does that mean in 3 months' time, 6 months' time, or up to a year?
Well, if they don't get any help, either in recapitalizing banks or help to the state itself, it may well be that the markets start asking for 10% or more. And if you have a very high debt and the markets are asking you 10%, you can't make it. And therefore, we have to make sure that, again, as long as they are taking all the measures and there is a plan and there is a way, they can borrow at a lower rate. What we want to avoid are very high rates, which we've seen in other countries. and then trouble starts.
Now, you within the IMF, you've also said that the eurozone is half finished and that there are questions about the viability of the monetary union itself. Are you running out of patience with eurozone politicians? It seems as if you're stepping up your language a little bit.
Well, we think that time is of the essence. We also think that the measures in the plan, which was announced a few weeks back, is a good one. But we've learned in the past implementation is difficult, and it's difficult not because anybody is acting badly. It's very complicated. There are many countries involved, but we're just saying, look, time is of the essence. Things which have been promised have to be delivered. There has to be implementation. All these things have to happen. Otherwise, we worry.
I want to turn a little bit to the United States next. Now, you spoke about the fiscal cliff before, and you've warned that the US economy will take a real tumble if a host of automatic tax hikes and spending cuts come into effect at the start of next year. What are the risks from that situation in your mind?
Well, there are two issues, which is how likely is it that that will happen, and we really think that it's not going to be, because anybody who looks at it knows that that would be a catastrophe. And then the question is how much of a catastrophe? And let me give you numbers. We basically at this stage in our forecast assume that there'll be a fiscal consolidation of about 1.5% of GDP. If we really fall off the fiscal cliff, it could be up to 4%. So 2.5% more. 2.5% more means that it would kill growth in the US next year. So this would be a very major issue.
So it seems as if you're saying that the United States and its politicians, they're going to choose not to go there.
Well, very much hope so, and I'm fairly confident they will do what's needed.
Now, the two problem zones in the global economy at the moment, it is the United States and it is the eurozone. They're the two biggest stakeholders in the IMF. They're not setting a great example by the looks of it at the moment.
Well, the US has a specific problem with Congress, which limits what it can do for us, but it surely is behind us in terms of the advice that we give. Europe has contributed to these funds that we've put in place. Again, they are putting a lot of money in a number of countries. I think we are doing quite a bit.
All right. I want to change topic to financial regulation, because the IMF has previously said that a lack of regulation led to the financial crisis. The LIBOR scandal is now playing out here in Europe and in the United Kingdom. And once again, there are calls for more financial regulation. Do we need more transparency when it comes to banking?
Oh yes, we need more financial regulation, we need more financial supervision, we need more transparency. And something like the LIBOR scandal is again creating questions in the minds of most people as to whether banks can be trusted. And the financial system is based on trust. And if trust is destroyed, then the financial system doesn't work. So yes, this is of the essence. And there could be more progress as well.
But aren't there risks around as well that there could be too much regulation? That, at the end of the day, is what the bankers are saying. They say that they're concerned that they will be stifled by too much regulation.
There's always this possibility. Financial regulation is incredibly difficult to do right. You can have general principles which are very simple, but when you get in the thick of things, it's very difficult to write exactly the right type of regulation. So yes, there might be cases in which some regulation will be counterproductive. But from where we are today, it's clear that more regulation in a number of well-defined directions, it's not as if we're just walking in the dark here, would be very useful. I think the financial system at this stage needs more rather than less regulation.
Do you think that the International Monetary Fund has a role in writing this new regulation and perhaps legislation?
I think we have a role, and we actually are playing a role. We participate to most of the instances which are writing these new regulations. We're working with the FSB, so I think yes, we can contribute a lot. We are not. This is not our main core business, but that's something that we know something about. That's something where we can help, and we are helping.
All right, Olivier Blanchard, thanks very much indeed for taking the time to speak to us here at France 24.
Thank you.
And with that, we're going to wrap up the program. Thanks for watching the business interview. And do stay with us. We have more news coming your way.